I do believe that in the next 2-3 years, we are going back to silver 15, perhaps even higher.
We have Lior Gantz with us. Lior Gantz has been a guest on my channel several times. Always appreciate his insights and his time. For those of you who don't know, Lior Gantz is out of Tel Aviv, Israel, and so he's been in the thick of what's been going on there. So we're glad that Lior is okay, and but he also has some insights on the market and what the Fed is going to be doing, and gold and silver. So welcome, Lior.
Thanks for having me.
First, let's talk about what's coming up. The FOMC meeting, the Federal Reserve. There's been a lot of buzz about what they may or may not do, likely what they probably won't do. Will they continue to pause? Will they raise rates? Likely they're not going to lower them.
They're going to stay here probably until May, and then they'll begin cutting. Don't expect anything incredible in terms of how much they cut. They'll probably cut once or twice, maybe 3 times in 2024, depending on what's going on. But you can expect interest rates to remain pretty strict for the next 2, 3, 4 years there.
With what is coming, most of the prices, it seems like, are kind of baked in. There's a lot of things that are going on in the world now, geopolitics. With we still have the Russia-Ukraine war. We have what's going on in Israel right now. But everything's kind of settling in with the markets right now. Any insight as to where you think silver and gold and how they're going to react from now till the end of the year?
In general, I think that the metals are going to be trading in a range up until May. And in May, once the Fed starts to cut, they'll start to rally a lot harder. But we are going to all-time highs for gold very shortly, relatively speaking. I do believe that in the next 2-3 years, we are going back to silver 15, perhaps even higher.
Silver at 50 or higher in the next couple of years?
Well, between 2 and 4 years. So what's happening right now is not only are we under deglobalization, but we also don't know exactly how the new order of how things will be done between countries will look like. So not only are we deconstructing globalization, we don't even have a framework yet for how the world would look like afterwards. We can start to see how it will look like by understanding what the goal is. And the goal is for countries that can depend on each other to be transacting with each other. And for countries that don't depend on each other, that don't want to depend on each other, don't trust each other, to have a very strict environment of trade between them, where the governments really regulate what you can sell to other countries, what you can buy from other countries. Globalization, free trade, that's it. It's done. So in that kind of world, things tend to be more expensive because you're not just looking for the arbitrage. You're not just looking for, hey, where's the cheap labor? Where is the cheapest place that I can manufacture something? But more, it's where is the most reliable place that I can manufacture something that might not be the cheapest. In the world that we're moving into, we're going to have higher inflation than we're used to in the past 20 years. When you couple that with the nonstop spending of the government, that will create a very inflationary environment. And when I say very inflationary, I just mean 3 to 4%. But when you compound 3 to 4% over a decade, that is about 25% of your savings power gone in one decade. That's a lot, and that's enough to send silver to 50 and above. Sorry.
And you look at the commodities and looking at silver as a commodity, where some of these other nations may just be trading in commodities. You know, they may be looking to trade, stockpile, wheat, corn, aluminum, tin, the rare earths, and silver would be a
like barter. You mean?
Barter and buying some of those commodities outright in those currencies with their local currencies.
For now, there's no indication that any important country is deserting the US dollar. The usage of the dollar right now, according to SWIFT, is at an all-time high. So even though China or Russia or countries that are 100% enemies of the West have largely been dumping treasuries, there's enough buying power in the West and Japan and pension funds within the United States. And of course, because we're doing a lot, the United States is doing a lot more business with Europe because Russia has exited that market. You have a lot more usage of the dollar in the EU. Between all that, I don't think that in your lifetime or in my lifetime you'll see true de-dollarization, but certainly you'll see a shift in which countries hold dollars. In terms of the trust in the dollar, it is true that the trust has been fractured for a couple of reasons. One, the debt ceiling it's a joke. The world sees that, and because it sees that, it starts to think about the national debt. But even more than the national debt can be tolerated because you can see countries like Japan, which has a far smaller economy than the United States, have 200% debt to GDP ratio. So the United States with 115 at this point, or 100 or 115, or the trajectory is 115 very shortly, it can bear this. The problem is that there is no plan. And that is what really rattles the markets. Like, the right and left, they don't agree. And therefore, it gets punted down the road without a plan. And that's the real problem. And the second problem arose more in the Trump years, is that Trump started to talk about defaulting on some of the debt, on saying, like, look, a country like China, we don't need to pay them. Let them suffer the loss and stuff like that, which a country with the reserve currency privilege cannot talk like that. So between those two, there's certainly a diminishing relevance to how strong the US dollar is. And I think that will play into gold and silver. But in terms of the reserve currency, there's nothing else. It's so better than all the other fiat currencies.
And I certainly agree with that. And there's been an uptick in the usage of the dollar between friendly nations to the West. But we know that the BRICS nations are, they've added, 27 more countries to the BRICS, and they want to chip away, and they are chipping away to try to move away from the dollar. But it's a slow process. I believe
it's 11 new countries to the BRICS.
Okay, 11. All right, maybe it's 27 in total that want to join, but maybe not have officially yet. So that is the kind of the world we are living in now. And even though we're seeing an increase, it's going to be a slow drawdown for the dollar, and the dollar is still dominating for sure. But nonetheless, it is putting pressure. And of course, we're seeing gold trading near $2,000 an ounce again. Mm-hmm. And when we're talking about how potentially the next couple of years we could see $50 silver, which kind of surprises me. Silver has been kind of languishing here for a while, but gold has really taken off. When we see gold, even though it's not trading anywhere near its all-time high when adjusted for inflation, that is a much more real possibility that we could see that, I think, probably than silver going to $50 an ounce in the next couple of years. And a lot of that, I think, has to do with central banks just stocking up on gold en masse. Especially after what happened in April of 2019 when gold went to a tier 1 asset, upgraded from a tier 3. And I think that's pulling it. And that means that gold really has become the metal that has really proven itself to be a stable store of value to the upside in its movement. But I'm excited to hear you say that maybe silver could get to that $50 an ounce level soon. That seems like what you're saying is that's driven by inflation and the need for commodities in the future.
Well, just think about it this way. Up until now, commodities have been easily sourced from anywhere. Now think of a world where the United States will have to fight China for its silver. There's going to be a premium on the price of silver or the price of many commodities. So it's not just inflation. It's what I call the peace dividend. We've been living under essentially a long peace. Certainly in the United States, you haven't seen any major war, certainly not closer to home, for many years since the fall of the Soviet Union. So you've been able to do two things. One, because the Soviet Union was such a huge storehouse of commodities, and it basically went from all of it being owned by the government to most of it in private hands. The world has enjoyed subsidized commodity prices for 30 years. And because the U.S. Navy patrols all the oceans, you haven't seen any piracy to a large degree. You haven't seen any tariffs, any taxes, anything. Everything was so cheap. Now, granted, the cost to this being cheap was that many great jobs were offshored to from the United States. So it's not without a cost to create globalization. And now it's turning around, and we're onshoring a lot of jobs in the United States. So certainly the middle class and lower income class are going to enjoy this period much more than what we call the elites, because they obviously are beneficiaries of globalization way more than any other class of people. Silver is mined for about $15 to $17 an ounce, and we have to realize that in the world we're moving into, it's not. It's going to be more costly to mine silver, and it's going to be more difficult to source silver. So it's not just inflation, it's deglobalization as well, and it's all these new uses for silver. And certainly there is an inflation component of it, but normally you see that component only at the end of inflationary bubbles. For example, 1978 till 1980, or 2010, 2011, where you see the price just going nuts. So I'm not saying that's what we're going to see. If we're at 23 or 24 an ounce right now, and I'm telling you that in the next 4 years, you're probably going to see silver at 50, that's double in 4 years. Double in 4 years, that's, it's reasonable. It's very normal. It's not every day that it happens, but it's not something that is a bubble. So we have to just keep that in mind. There are stocks that double in 2-3 weeks. So in 4 years, it's a reasonable move.
One would think it would be a reasonable move, but we're talking about silver. From March of 2020 till August of 2020, it doubled as well. But it also crashed, and I think to get it at a sustained doubling would be quite extraordinary, even in 4 years, in my view. But let's move on now. There's two things I'm going to talk about now. First, we can briefly talk about the geopolitical ramifications that we're in now. It seems like we're settling in and about what's going on and where you're at, just south of you, with Gaza. It seems like that other than what we've been hearing, what the markets fear is a widening of the conflict. But so far right now, the IDF is in Gaza. They are surrounding some of the Hamas strongholds. It doesn't seem to be like there's a lot of buzz that Turkey is going to rattle its sword or leave NATO. I don't know what Saudi Arabia is thinking. We know what Iran is thinking, as they're supporting all this. But what are your thoughts about the potential of a widening conflict affecting the market?
To Iran, a terrorist organization like Hamas is like disposable plastic cups. They're not even in the same factions. One is Sunni and one is Shiite, and they can't stand each other. They're frenemies. Iran uses proxies like a game of chess, and some soldiers are disposable and some are more important. Hamas to Iran is nothing. They could care less about them once they've done their job, and that's what you're seeing right now. So that's not going to change. Iran is not going to risk any major player on its board to save Hamas. Hamas is done. As an organization, they're done. As a movement, they have a lot of people that unfortunately are as delusional as they are, and live in the 6th century. So that's not going to go away. The idea is to create it, to make sure it stays a movement on the fringe and not an organization with billions of dollars in budget, so they can create Sodom and Gomorrah on our southern border. So that's step one. Now, step two is going to be dealing with Hezbollah on the northern border. Hezbollah and the Iranians are the same Muslim faction, so they are way more important, and they have a far bigger military. So there is where you can start talking about what you call the regional war. The IDF is obviously much more capable than Hezbollah. It's not a contest, and that's important to remember. It's not a contest. We as a country have far more military might than any of these proxies, and the reason we haven't attacked any of them is because Israel has been trying to create any sort of arrangement with these people for many years. It's hard for a Westerner to understand what a jihad is, what religious war is. So the West or the UN or European nations, they look at it from the perspective of there must be something you can give them. There must be something to appease them. Give them something. Give them work permits. Give them more fishing permits because Gaza is on the sea. There must be something you can do. And they don't understand there is no partner for that discussion. That's the whole premise of the Abraham Accords, is to go past this Palestinian issue, normalize, and that's what Kushner and Trump realized, is that if you can normalize with most of the Muslim world, then the Palestinian problem will take care of itself, because there's such a small amount of people and they're creating all the ruffling. It's almost like one of those giant jars of glass, and you put one coin in there and it makes a huge sound, but it's just one coin. I think that where you might see it becoming more of a regional war is once we need to start dealing with Hezbollah, which is the next part of this. That's when that's a much more expensive project for the Iranians. They will do more. In other words, you know the Hormuz Strait, right?
Yes.
Okay, so that's when you can start to see, for example, Iran sending drones to sabotage like tankers going to Germany or France, and especially over the winter when they need the oil much more for the heating, electricity, etc., etc. And then you'll see pressure. Hey, Israel, why don't you settle? Like, do something, compromise. Our citizens need oil, and that's when the chessboard becomes more international. But for now, certainly Iran's not going to do anything for Hamas. They might do something like symbolic, but they're not going to lift a finger. If you know the Muslim world, the Iranians, they look at Hamas as like third-tier Arabs. All of this fear is actually priced in. In other words, normally what's going to come next is this economy in the United States has very low unemployment, and there are layoffs everywhere right now, and there are worker strikes and stuff like that. There's going to be a lot of disorder once unemployment rises above 4%, and then 4.2, 4.3, etc. Because you can already see what kids in this country, I shouldn't even call them kids, they're adults, and what's going on in their bird brains. So imagine them now without jobs. There's going to be a lot of disorder, and it's going to come on an election year. So you're definitely going to see the Federal Reserve easing next year. You're going to see more government stimulus in various fashions. And just keep in mind, the markets are forward-looking. So as they see that, the markets are they're not going to be bad in 2024. I don't think they're going to rally hard, but we're not going into any sort of a crash environment. And that's the same with gold and silver. I do believe that they will have a good year next year, but not a breakout year until rates start to go down. But what is certainly looking very attractive are infrastructure companies and mining companies, because if you can now very reliably project that inflation is going to stay with us for 5 to 7 years, then projects that take a long time to build, like infrastructure and like mining, those tend to do the best, because those companies, like oil companies, they live on the spikes. When the price spikes, they increase production, and that's where you make all of the money, in those spikes. That's becoming much more of a consensus, and as it becomes consensus, the prices are going to reflect it much more. If you can't get in now, don't get in. If you don't understand that, when everyone thinks World War III, and there's a record amount of money in stashed in money market accounts, and gold is at near all-time highs, and the mining stocks are doing nothing. If you can't understand the dynamics, that this is literally the best setup for an emerging bull market, then you can wait until the trend is really confirmed. But man, this is a bull market. This is how bull markets are born. You cannot be more pessimistic and have better fundamentals. That's how bull markets are born.
Lior, this has been wonderful. Thank you for your insights. I think a lot of us learned so much about what your experience is there, not only on the ground, but just in terms of the markets and everything that's going on. So thank you for your insights and for being here today. We look forward to speaking with you again soon.
Absolutely.
And a multitude of gratitude to each and every one of you for taking the time to watch this video. And I want to encourage you to please rate, share, comment, and subscribe.